Hi, my name's Ryan Gray and welcome to GreyTrading Economics and Finance. In this video, we're going to be backtesting EURUSD using the main strategy that we use at GreyTrading, which is developed from the 9-state derivative model, which is the top graph, and then the middle graph is a stochastic RSI applied to the 9-state derivative model. So this isn't using price data, this is using our model. And then in the bottom, we've got some series of impulses which are formed at the start of the day, which is what we're going to be trading off. So I'm going to begin in 2022, we'll plot all of the buy trades first, and then we'll do the shorts. Just going to begin by plotting all of those out. So it's going to take a few minutes. If you've watched the other backtesting videos, it's exactly the same. And we're going to be showing you how I can make 20% per year just trading euro dollar. So that's 20% nominal, so that's about 2,200 to 2,500 pips. The other thing to bear in mind is I use 2 to 1. So if the price goes up 1%, I would pocket 2%. If the price goes down 1%, I would be able to short and make 2% on that as well. So although I'm quoting 20%, risk-wise, that's giving me about 40% gain. So we've backtested so far 6 out of 8, and each one delivered between 10 and 40%. Only one delivered 10, the other ones delivered 25 plus. The main reason why it delivered 10% on one of them was because the currency didn't move much that year. It was just very stable. There wasn't really a reason that the strategy wasn't performing. It was just the currency wasn't moving. So I wouldn't read into that one too much. So this strategy can be backtested going to 2000. So that gives you 20 years of data that you can get all that data on TradingView. So you can backtest and backtest more. So this video we're just going to cover 1 year, which is the most recent year and probably most relevant. Markets were quite fairly I wouldn't say it's a really massive year last year, but it gave very good gains. But it does that every year, so almost finished. And then I'm going to add in the percentages and then add those percentages to the spreadsheet, and we're away. So we're almost finished. Looks fairly good here. I've backtested this before and I think it's 20% it gives, 20 to 25. Okay, so that's that done. Let's get to the start of the data. And we're going to now add in the percentage changes. So this indicator is custom made. I have videos on how it was coded originally, and then obviously I've coded it into TradingView. Really interesting how it works. Quite sort of mathematical, very mathematical. It's over 1,000 lines of TradingView code. So that's all included on our website. We've also got a lot of videos on coding, how to code, how to improve trading, sort of any strategy, and then applying it to ours in particular. We've got a Forex school. Forex school is free. It's got a lot of information, probably the best Forex school you're going to find for free. Our information tends to be better than the other people. I've got a degree in economics and finance, so I know what I'm talking about when it had to do mathematical models of economic data. We've also got, so some people might say you're not including macro news into it. I've got software that I've made, I personally made the software, and it it analyzes all 500 economic reports. So there's about 560 economic reports that get published each 5 weeks. And they're all the economic reports in the world. And I've got a piece of software which downloads all that data and then analyzes it. So that's just because we're using technical analysis or quant in this strategy doesn't mean we're not paying attention to news data. So if you want to include sort of news into the data, I've got the tools that would enable you to do that as well. You can do, but I think with the time constraints that people have with a busy job, most people got jobs, so then if you're doing this on top of a job and then trying to do your news finance, I think it's easier just to trade the dailies, especially if you've got a strategy that's delivering the gains. This is the one that's going to be the easiest one to do on a daily basis. It can be backtested longer than the news. Some of these economic reports that come out each month, they're new reports, so that means that they've only just been started. Not everything is CPI, not everything is GDP. Some reports get added to the 560 reports each year, some get dropped. So there are certain ones which are always been there for quite a long time, like non-farm payrolls, but you'll see that it's umming and ahhing, or whether you want to include economic data, you can't go back as far in terms of, say an economic report comes out at 1:30, so then you're trying to find out 1:30 20 years ago in 2003 or something, then it's obviously going to be harder to tell whether that is at which hour that is because of daylight saving times, because it's different if it's in America. So there's a bit of variation that you'll see there that you might not factor into your trading strategy, which might cause all your results to be biased. So there's things like that which probably macro doesn't account for very well, because the further back you go, the more difficult it is to do that. It's okay doing it in the week, but that doesn't give you any backtest, or not long enough. Okay, so that's my rant over on that. So I'd say daily strategies are the best. Macro is sometimes useful. You can look at our website. So we've got, just on a tangent here, we've got a website called Grey Binary, and then this will have eventually all of the macro. So this is designed to be like Bloomberg, where we're going to have each economic report, and then we do event studies on the economic data. So if a GDP is 1%, it's higher than the forecast, and then we look at the price every 6 hours or every 2 hours after the release, and then look at the correlations. So that's what you can do with macro. So we are making that into software that's available, but our best strategy, hands down, is this daily one. Okay, so I've backtested it there, and now we're going to add those into Google Sheets. Okay, 0.31. Okay, so quite a good start there. 7% already, and it's not even April. Okay, so 2.93 on that one. 0.15. It looks like quite a loss on that one. That one should be red. It looks like it's going to do, I think, about 20%. Yep, done over 20% now. So 23.5. It's quite an easy system to use this because it's just got the impulses at the start of the day. That's ideal for people who don't want a complicated system, don't want to overcomplicate things. So if that sounds like you, maybe consider subscribing to the system. It's lifetime access, so you'd get access to the TradingView script, and then that would give you access forever. And it's easy to use. Okay, so that finishes it off. We got there in the end, 27%. That's a good year. Slightly higher than what I thought it was going to do. Thought it's going to do about 20%. 27. That's a good return. So then again, you're using 2 to 1 on this, so that would give you about 50% again. Just plot the chart because it's slightly longer. It's a great chart going up all the year really. So adding that in now to the portfolio, you can see added in there, only one left. You can see the chart is on close to 50 grand. So that's giving you sort of, I think, quite a lot. I think it's about 200%, but then it's compounded. So if we added up all of the returns, we'll do that in a separate video, going over the analysis of risk. So you can see the one on the top here is 2 to 1. So that means that if it goes up 1%, you make 2%. And the one on the bottom is what you see on the bottom here. So technically, that one should probably be a red line. to make it easier to understand. So I don't know how you customize the finger, but no, that's just the only discrepancy there. Okay, so that covers the end of this video. I hope you liked it, and I hope you're thinking of maybe subscribing to our strategy or system on GreyTrading.co.uk.